In this video, we're going to have some fun today. This is the absolute laziest way to trade forex, or really any other financial market whenever you have hedging mode enabled. In this video, I'm going to show you how you can literally trade with zero edge, and most of the time come out in either a net profit or a break even on trades, even if you were completely effing wrong. And if you don't believe me that I can actually do this, I've actually been trading live in my free Telegram channel for the past 6 years, which you can get immediate access to this right now. You can be here in the next 10 seconds. It's really complicated. You have to click the first link in the description. That's it. Or I'll probably put it in the pinned comment as well. If you're that lazy, you can't find it, you can't click the read more option in the description, it'll just be in the pinned comment. This free Telegram channel is more valuable than your guru's paid signals group. If you think that's the case and you're in my free Telegram channel right now, why don't you leave a comment below and let everyone know? This was our last week here in the Telegram channel. I started a $50,000 account, and so far this week, I've grown at pre-commission profit over 15 grand. I'm growing this account to 100K. Then I'm going to internal transfer the profits, and I'm going to start another 50K account. And I'm going to do this again and again and again and again and again, and I'm just never going to stop. And every now and then I blow an account. However, a good chunk of the time, at least 3 accounts out of every 4, I will grow to some degree of profit. Every single trade I take, every management update, literally everything, all the wins and losses, I share literally everything here. And not only this, but I'm about to show you how. I'm going to give you the keys to the kingdom right now, because you're probably sitting there wondering, like, this guy's probably full of shit. He's telling me like I can just use hedging and it's the laziest way to trade. Let me show you how and why. So the first reason I'll show you how is because you do not have to predict where the market's going to go. And then I'll show you the reason why, which is because it relies on the statistical likelihood of price eventually bouncing somewhere. So let's just click a random pair here. In fact, we're going to go to random.org. We're going to generate a random number between 1 and 10 to figure out which currency pair to trade. 1. Okay, that's convenient. So AUD CAD. I'm actually going to trade on this right now. And then we're going to see how far back we should scroll. 6. I'm going to count to 6 and scroll back. 1, 2, 3, 4, 5, 6. I'm going to hit the replay right here, and I'm going to go back in time. So we are currently sitting here back in time, my sweet friends, at Sunday, November 20th, 2022. This is like, a little over a year ago. So here's what we're going to do. When price gets anywhere that we think it's going to go, if we think it's going to go down, we're going to sell. And if we think it's going to go up, we're going to buy. We're going to pretend that we have a $50,000 account, and we're only going to use one standard lot. See this right here? 100K worth of volume. That means one standard lot. Very small sizing, in my humble opinion, from a 50K account. And one thing is very important you should know. Past performance doesn't indicate future results. It can't be relied upon for that. And also, trading is risky, and you're probably going to lose all your money. Even if you do literally everything I say, you probably shouldn't even be trying trading. That is just the truth. For those of you ridiculously crazy enough to still want to learn how to trade, I will literally show you how you could trade in the most laziest way humanly possible. All right. So you don't need a strategy. You don't need any confirmations. You don't need any indicators. You don't even need to draw any damn support resistance zones on the chart. The idea is to wait for price to get to an area where you think it will bounce and then enter a trade. So here's what we're going to do. We're going to wait to see if price gets to a support or resistance. So price has got here to this previous low. We could do the whole thing with drawing the zone and saying, look, it was resistance and now it's bounced to support. It might go up again. But instead of doing that, we're not going to do that at all. We're just going to indicate that we're going to buy here. And for a buy, I'm going to use this little purple path tool here. So we're going to buy. That's the purple order. And if we sell, then it's going to be this order right here. So here's the plan. We're going to buy. If it bounces, we're going to close in profit. Okay. There's no way for me to do it with the buy or sell because TradingView doesn't let you hedge. So we'll just have to represent it with these tools, buys and sells. So we're going to buy right there. Let's see what happens. It's going sideways. So then we close up here. Okay, cool. So we've bought, we closed with one standard lot. How much profit was this? It's 117. For the sake of simplicity, let's just say, it's $10 per pip. This will be a little over $1,000, about $1,100. Cool. Now guess what? Price is at resistance. Let's just yawn, let's stretch back, and let's just sell. Very lazy, not doing anything. So price is going against us right now. Look, it's breaking the high. So now it's like, oh, what do we do? Should we hold? So for now, I'm going to hold this. And then if I think it's no longer going to go down, then I will. Okay, there we go. So I'm going to buy. So I'm going to buy above these highs right here. We're going to represent it with this little horizontal purple line. So if we're using one standard lot, and if for the simplicity of this example, one standard lot is equal to about, like $10 per pip of price movement, let's see how much loss we're locked in at. So we've sold here, went into drawdown, 53 pips, so about $500 worth of loss in this hypothetical example. So at that point, we've sold at one standard lot. It didn't work out. It broke the high. So we just thought, okay, it doesn't look like it's going to go down anymore. Let's hedge. Hedging, essentially, it means you're taking the loss, but instead of closing it into your closed terminal, it just keeps the loss open in your open terminal such that you can creatively manage yourself out of it using what I like to call dynamic trade management. Instead of just putting a stop loss, letting it get hit, and taking multiple stop outs in a row, you can wiggle yourself out of BS situations like this, barely doing anything, just by hedging, waiting for the next trade, and then taking the next trade, and eventually rolling out of it. Now, this works most of the time. Whenever it doesn't work, the market continues going one direction, you're wrong over and over and over, you blow an account or you fatally wound an account. That is why I only start accounts at like 50K and then I grow them, like 50 to 100K, and then I grow them. Otherwise, if I put all my trading capital into one account, this wouldn't work. It might work very well for some time, but I would eventually lose all the capital. The risk structure is the fact that I use a small percentage of my capital to start the account and then grow it. Again, trading's risky. You're probably going to lose money doing this. This takes experience. It takes time, and it also takes you following along in my free Telegram channel where I share literally every single thing live every day with 57,000 members. If you're not in there, what the hell? It takes you 10 seconds. Click the link in the description. Stop being lazy. Now, let's go ahead and get started again. We're hedged here at a negative $500 loss. The idea is we're going to wait until price moves to a new area where we think something might bounce. So I'm going to use this high up here. If price can push a little bit deeper, I will then close this buy. So I'm closing this buy and profit right here. So that was the hedged trade. And what I'm going to do then is I'm going to add a sell. And if price breaks above this zone, I will then manage that trade. So here's what happens. Since we're using one standard lot, and this buy was taken right there. Since we're using one standard lot, what is going to happen is if price falls halfway in between these two positions, we can get out at a net break even. If it goes all the way to the first position, we get out at a net profit because this trade ends up being break even and this one ends up being the profitable one. So let's see what happens. So that pulls back. Let's just say we missed it. Let's say we were asleep. We couldn't close it break even there, so we just held it. It's going against. The market's really stretched out. I don't want to hedge just yet, just because I don't feel like that would be a great idea because its price is so stretched to the upside. This allows you to just manage very dynamically. So price is pulled back. Still think it's a little bit stretched too far. Let's wait and see what happens. So at this point, I'm not quite sure what will happen. We're going up. Okay, so this is probably a position in which we're going to have to manage it, but here's how I'm going to manage it. Instead of hedging up here, hedging means we'd have to buy two positions at two standard lots up here, right? And this is a pretty big drawdown. We've got that drawdown there, which is $2,000, and we get this drawdown here is about $1,000. It's about $3,000 of drawdown. And how much profit have we made? 1,000 there, and then 500 there. So we've only made 1,500, but we got $3,000 worth of drawdown. Now, the account was 50K when it started, so this is okay. This will happen from time to time, but it wouldn't make sense to buy up here. What I'm going to do is wait until it looks like I can get into a sell at an optimal price, and then I'm going to sell. So here's what I'll do. This is a good spot to sell at because it's stretched out really far. Now what the management plan becomes is if price can pull back down into this region, then we can get out at a net break even on everything. So let's see what happens. Price starts to pull down, starts shooting up again. Doesn't look like it's a spot that I'd like to buy at. It's just really stretched to the upside. And the only reason this works is because we have small enough sizing. So the market comes right here. Let's see what this currently is. How much profit? That's in about $1,200 profit. This is in about $1,400 loss, and that's in a little bit of a loss too. Let's see if it can go a little bit more. Struggling to go to the downside, but I think she's got more in her. Why? Experience. Okay. So this will be a good spot to manage it. So this position here is in a $1,700 profit. We're going to book that there. This position here, we'll call that break even, net of commissions and swap fees. This trade took from the 30th to the 19th of December. So, you know, this was like a couple weeks. And then this right here, this is a loss of 98 pips. So we're going to do the final math, you know, at the very end of this, but you can already see this was a profitable scenario. It actually wasn't even break even. That right there was $1,600 of profit. This right here was only $1,000 of loss, and this one was break even. So this is actually a $600 profit. Now, we're going to take one last trade, right? And you do this over and over and over again. What you have to do is you have to make sure that you're sizing appropriately, meaning you cannot go in like 10 standard lots and then adding in drawdown every 2 pips. You'll blow the account very quickly. However, if you know what the stats are and you know that eventually the market usually bounces somewhere, the only way you're actually going to blow an account or fatally wound an account, like lose half of the account or more, is if price just rockets against you and just never pulls back. Then that happens, and that's going to happen at some point. For me, it happens anywhere from like 1 to 5% of the time. Most of the time, I'm able to wiggle myself out at a net profit or a break even. So let's get ourselves into another trade here. And you know what we're going to do? We're going to randomly just buy. With this zero analysis, again, 100% degenerate trading, super lazy. Let's say you didn't even look at the chart, right? Somebody told you like, hey, Kyle, look at the chart, man. Do you think it's a support zone? And imagine your name is Kyle and you're watching this video and you're like, yeah, I don't really know, man. I don't really want to look at charts today, so I'm just going to buy one standard lot. And I'm like, whoa, hold on, bro. What's your risk structure, bro? How are you defining risk? And then you're like, dude, the account is the risk. I put a small percentage of my trading capital into this account. If the whole account blows, it's no big deal. And I'm like, what are you going to do? Like, where's your profit target? Where's your stop loss? And you're like, I don't have one, bro. I'll close it in profit if it goes into what I think is enough profit. And then if it goes into loss, I'm going to manage myself out of it. It's no big deal. And I'm like, wow, Kyle, you've got some really big, let's go ahead and get into the trade. So as luck would have it, it bounces. Instead of hedging, we're already kind of stretched really far. I don't think hedging would be the best idea here. I'm going to hold it. To me, it looks like it's going to try to go back to the previous high. And if I'm wrong, it will break the previous lows and I'll probably get hedged. Trying to make higher lows, making higher highs. Let's see if she gets to the previous high, I'll close it. There we go. So we get to the previous high. Now let's keep track of like what happened here, okay? This is the last trade. If you realize 50% of trades on average, if you do this like 100 times, about half of them will immediately start going into profit and they'll end up in profit. The other half of them will not. So if you enter randomly on the chart, half the time you're going to be right and they're just going to go into profit. Again, you have to do this with small sizing. If I was using, for example, a $1,000 account, I'd probably be using like 0.05 standard lots on most pairs doing this. If I was using a $500 account, I'd probably be using like literally 0.01 or 0.02. Now you may ask yourself, Nick, how am I going to make $5 million my first week in forex trading with a $500 account if I'm only using 0.01 standard lots? The answer is you're not. You should probably go work at McDonald's because that is the place for you if you're wanting to gamble 10 standard lots on a $500 account. I don't even think you'd be able to enter that. And so the key here is to make this work, the sizing has to be proportionate to the account balance. If it's not, you're gonna very quickly run into a small losing streak that completely wipes out the account, and then you have no capital to trade with. Better to make a smaller, consistent profit than try to grow an account super, super quickly and then blowing it off the first few trades. Now, you can do that, but it's really something that should be done, in my opinion, as you get way more experience, because then you can use your discretion, your discernment of price action, your intuition, your third eye, Some people call this BS. Some people call it magic. Some people call it, you got to harness the energy of the universe, bro. Whatever it is. If you have enough experience, then you can start being able to use that experience to start actually trying to predict where price will go. Then maybe you have a little bit higher win rate. But for all of us idiots, myself included, you and me are both idiots. We're in the same rowboat together going to Pip Island. We're complete idiots. You don't even have to have an edge to be profitable if you let the risk structure be the thing that makes you profits. I've said for years, you keep things simple and control risk. If you do that, look how simple this was. Buy whenever you feel like it and sell whenever you feel like it. That's the strategy. Gold star, gold sticker for us. We are freaking killing it here. Hey, what's your buy criteria? Whenever I think it's gonna go up, bro. And then I drop the microphone, but I'm by myself here in my office, so it's not a big deal. Let's calculate the win rate in P&L. First trade was a win. That was profitable. Second trade was a sell. This one was wrong. Then we had to hedge that position. So if this was 1 standard lot, that buy was 1 standard lot. That closed in profit. Then we added. Then we were wrong again a second time, right on this time. So far, this was a profitable scenario. That trade was wrong. This second trade was wrong. That third one was right. So we have 2 profitable trades. We got 3 profitable trades. Then we got 2 of them. One was break even, one was wrong, the one was right. So the win rate is actually a little more than 50%. The win rate here is actually 60%. Because we won this, won that, broke even and lost these. So that's 2 out of 4. 3 out of 4, 4 out of 4. So actually we won 4 trades we were right on, and we were only wrong on 2 of them. So that's actually a very high win rate. If we kept doing this for another 16 hours of me back testing here, if you had the patience to watch this video, which you can't with your squirrel brain being able to pay attention for that long, if we kept doing this, the win rate would usually fizzle out to be around 50%. But that's that. This is like I said, this is literally if you just buy and sell anywhere, your win rate's going to be around 50%. It's 50-50. It goes up or it goes down, right? Isn't that crazy? It just goes up or it goes down. 50%. Who would have thought it? Genius, right? I'm a genius. I've been trading 8 years. Still can't predict the market. But even if you can't predict the market and you let the risk structure be the thing that matters, controlling the risk is way more important than trying to predict the market. Because even if you can predict the market, eventually you're going to be wrong, even if you have a 90% win rate. And when you are wrong, you don't want to get your ass beat. The market makers, and myself included, will come to your house with a baseball bat. And we'll just start figuratively beating your trading account down until the balance is 0. And then I'll dust my hands out and walk away and said, Kyle, you should have controlled risk, man. With that being said, there were 4 trades won. There were 6 of them lost. Let's calculate the total P&L. Let's just call that, so $1,200, right? We'll call it $1,100 minus $99. So we'll just call that break even so far. Then $500 right there. This was break even. So we got 500 plus 1,600, so that is 2,100 plus another, this thing's in the way, so 2,100 plus 2,200, so that is 4,300. And let's just take away, let's say swaps and commissions ate up $300 of that, so then we'll just round it down to 4,000. So over the course of Monday, November 21st, 2022 to January 4th, so this is about a month and a half. Over the course of a month and a half, look at the decisions that were made. And it's not like you have to quickly be there and get the alert immediately, right? This is an hourly chart. Most of these trades to enter in the general region they were at, you would have had a whole freaking day or more to enter at that location. Meaning if you work your construction job, or you work as a welder like my client Julian, or you go and you're a freaking, I have this dude who's a doctor, who's a surgeon, who's in surgeries sometimes, and he's got his phone sitting up while he's in the operating room. I shit you not, that happened last year. No matter what you're doing, you can literally wake up in the morning, half asleep, check your phone, MetaTrader, or you could, I trade, one of my accounts is here on forex.com. You can get on your forex.com account, whatever. And then you can literally just look at the chart and ask yourself, do I feel like this is going to go up or down? If you think it's going to go up, buy. You think it's going to go down, sell. This can take you 5 minutes. And I'm literally not how am I kidding, right? How am I BSing you? You're looking at a chart and you're just asking yourself, do I think this is going to go up or down? Your reasoning can be whatever. Screw it. Dude, nobody cares about your reasoning. You could say the smart money order block liquidity ICT fair value manipulation gap is showing that the price should come down because the banks are liquidating retail stops above the highs. And I'm like, bam! I'm like, get out of here, bro. I'm selling because it's at resistance. And then you'd be sitting there like, oh, but bro, I don't know if it's a resistance zone, bro, because of the resistance zone further up, bro. And then the market makers, and I'm just like, I just bring a gun and I fire it up into the air and everybody runs away. And I'm like, I'm selling. Sue me. Don't actually sue me, right? This is just my personal decision. You do whatever you want. Not financial advice, just generalized education for entertainment purposes only. But you literally buy or sell whenever you want. And during the course of like, what was this, about a month and a half, $4,000, and you're just using like small risk. And the max drawdown during this time period was we said this was a net drawdown of like $3,000 at that point. Plus whenever price went up here, that was 600 plus 2,300, so 3,000 plus 3,000. So this is what, like $7,000 worth of drawdown. So, and then the profit was $4,000. But keep in mind, as long as you have enough bankroll in the account, even if the drawdown slightly exceeds whatever your P&L numbers are on average, if you know most of the time the ending final outcome is going to be like either a break even or a profit, then it doesn't matter. In the scenarios we've had here, every single outcome once it was finished ended up in a profit. Even this bad outcome here, even when it kept ripping up against us, like, right, like this still ended up being a small profit. Actually, it was a pretty good sized profit when you count that trade there being $1,600 minus that, which is like $1,000. This was break even. So that was a $600 profit. And that was, we were completely wrong, right? 2 times in a row before it finally worked out. So the ending outcome was like a little over $4,000 pre-commission, pre-swaps. And this is just one of the ways that I trade. There are so many ways to make money in the forex market and the stock market and the crypto market. Don't even get me started on crypto. Bitcoin has been ripping up, and so has Algorand, my 2 biggest positions in my portfolio on crypto. I've made over $230,000 last month, and this was February of 2024, and right now we're in March of 2024. We're on March 2nd. It is crazy how much money can be made in the financial markets if you take the time to get experience doing and learn what you're doing. The problem is most people aren't going to take it seriously. Most people are going to quit. Most people are going to think they can get rich quick and start risking stupid amounts on small accounts and just blow them back to back to back. And if your risk tolerance is high, then that is okay, my friend. Feel free to gamble. That is perfectly cool. That is your life. That is your decisions. That is your cash. Most people will lose money trading, but if you take the time to get to learn, I think it slightly increases your chances of actually getting profitable. And if you want to increase your chances even further, not financial advice, I'm not guaranteeing you anything. If I'm guaranteeing you anything, you're 99% sure to lose money. So you should just stop watching YouTube. You should unsubscribe. You should dislike this video, and you should just move on and go work at McDonald's or something else, right? Just go work a job. At least your income's relatively consistent. Trading is not for everyone. This shit is freaking insane. This is really, really difficult to do. But if you take the time to do it and you treat it like a business and you put your blood, sweat, and tears into it. Maybe not blood. That would be kind of insane. But if you literally put all your energy into it and learn over the course of years and years, it took me 2 years to get profitable. And when I got profitable, I was only making like 1K, 2K, 3K a month. But that was life-changing for me. I worked like 85 hours a week before this at 2 different jobs. One of them paid $13 an hour. The other one paid $8 an hour. And for 85 hours a week of work after taxes, I made $2,600. That is how much I worked my ass off, which if you live here in somewhere like the USA, that is like not a lot of money. For 85 hours of work, that is nuts. This was like back in 2016, 2017. But that being said, when I started making even like a couple $1,000s a month, it was life-changing. Now I get to the point where I had this first month of the year in January, I lost $90,000 between forex, equities, which is like my long-term holdings and stocks, and then also cryptocurrency. I lost $90,000 that month. Then I came back last month and made $230,000. And then this month, we're already up this very first week of this month. This is not even counting crypto, which is just disgusting. But this first week is, so after commissions, what? Almost 15 grand. Little under 15 grand. Watch me grow this account from 50K to 100K. If you're not in this Telegram channel, this is literally free. You literally have zero to lose right now by just clicking the first link in the description or the pinned comment and joining this group. If you're not in here, I don't even know what to tell you. I teach everything I know for free on YouTube, and I hold nothing back. And I call literally every single trade. You can go and see for yourself. Scroll back through this channel and just literally look at everything. Everything the moment that I do it. All the entries, the exits, the managements. I show, like right here, this was the past week. This was $80,000 in crypto with BTC and Algo. Like I show it all. If you're not in this Telegram channel, I mean, come on, there's nothing I can do to help you if you're not in there. Click the link in the description or the pinned comment, and I'll see you in my Telegram channel. And you can watch me do this live. So that way you know I put my money where my mouth is. If you like this video, be sure to do whatever the hell you want. I'll see you in the next one. Cheers.